Your real estate today. Happy Saturday. It's Paul Jameson, your host. I am so glad to be spending Saturday with you. I bet you've heard that before if you're a longtime listener. I love spending Saturday with folks talking about my favorite subject, and that's real estate. Your real estate. Anything having to do with it, whether you're buying, selling, investing, refinancing, fixing, changing. Today is an exciting day for two reasons. Number one, I get to spend the room with one of my favorite heroes, TJ, because he got me internet in the studio. He stole somebody's adapter so I could be wired in. This has been the
You're not supposed to say stolen,
Okay, borrowed. This sucker's going in my briefcase and I'm going to run out of the building. I am actually wired into internet. Sandy, we're going to be able to actually make it through a show with internet.
That's great. It's progress.
Wow. 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 YAY. Yay. We got this. And as you can already tell, Sandy Dickinson with Summit Funding is joining me today. So if you want to watch the jovial expressions and see what we look like through the show and see some of the after the show between the segment, you can always tune in to my YouTube channel. I have not been blocked yet, Jameson Realty. And you can also go to WBT's shows tab and listen to our podcasts anytime. So excited to be spending time. Hey, Sandy, how are you?
I'm good. Thanks.
Boy,
good to
we're
be
going
here.
to do some more of those myths today. Remember we started on that and we only made it through like 5?
Yeah, there's a lot of them.
Yeah. And today I'm going to talk to you all about what I learned this week. And then I want to talk to the buyers in our world. And I want to talk about some pitfalls around making an offer. And then if we have time, I'm going to tell you some tricks and some thoughts if you have an issue with an appraisal, what you can do. Does that sound like fun?
Yep.
I think we need more like 3 hours. TJ, you think they would mind if we just kind of went on for 3 hours?
That's your call. You go ahead.
Okay. All right. He said go ahead. So that's good. What they'll do is they'll speed it up times 3 and we'll sound like Pee Wee Herman on crack for an hour.
Yes.
So I don't know what Sandy you'll sound like, but it'll be fast. You don't talk fast anyway. Yeah.
No?
No, you don't. I, on the other hand, when I get excited, I sometimes talk faster. You may not understand what I'm saying, but I do talk faster.
I'll translate.
Okay. All right. You're going to do sign language? Okay. So what did I learn this week? Let me tell you. Pricing a home is a blessing and a curse. Now, what do I mean by that? We all want to maximize price, right? We all want to get the most for our property. That's the right motivation for selling. That's the right motivation for any type of financial decision. You want to maximize the price, but pricing is an art. And how you price things is an art. It is not a simple, what did the guy next door sell for? Put a 5% premium on it and stick it out in the market, or a 50% premium in some cases I've seen these days. Pricing is an art, and you have to look at it that way. And here's what I mean by that. So many people have treated pricing over the years like a used car. They're in the mood to haggle, or they're in the mood to test your desire to buy that piece of property. And if you're buying a car from certain dealers, not all, but there's always this perception that whatever they're asking, there's room to haggle. So a house worth $350,000, some people are putting it out there for 400, 390, and they're saying to the market, I know I'm overpriced, but if you want me, come get me, you know? And, you know, in less than a month's worth of inventory, they almost dare you with their bloviated price to come after you. Well, y'all have heard me say this before. Pigs get fat and hogs get slaughtered. So if you're up there and you're looking to test the market, you call it what you want to call it. I call it price gouging to a certain extent. You know, it's a real problem. And Sandy will tell you why one of the problems is appraisal. And that's going to come to get you because that's the great equalizer. That appraisal is the equalizer, is it not, Sandy?
Yep, it is.
It is. The appraiser is going to come out there and, you know, he's going to call you. He's going to call you out on the map. Sometimes fairly, sometimes not fairly. But we'll deal with that later. But I have a very particular strategy when it comes to pricing. Every agent does. But this gray hair didn't come from guessing. This gray hair came from experience. And what I do is when I price, and I'm giving you the philosophical answer, is I want to create a pricing in a home where demand drives the price up, not down. So if you price that same home that's worth $350,000 at $350,000 and the market is pushing, you want it to push it higher versus lower. So what do you think psychologically would happen if you priced it at $390, nobody bid on it, next thing you know, you lower it to $380, nobody bid on it, then you lower it to $370, nobody bid on it. Where do you think your offers are going to come in? They're going to come in at $350 or below. So what you've done is you've taken the opportunity for the market to respond to your price, which is fair, and drive it up based on demand. So always think pricing needs to be an upwardly mobile strategy, not a downwardly falling strategy. The farther it falls, the more desperate sooner or later those buyers see you as being. So think about that. Listings are in great demand, so seize the opportunity. But remember, always have a transition plan because it may sell and you're going to need a place to go. And we'll talk about that in another show. All right, Miss Sandy.
Yes.
Tell me about your mortgage update.
Well, rates seem to be pretty steady right now. They bumped up for a few days and then they seem to have settled down. And I guess, you know, we'll just see. Here's what I'll say. They'll either go up or down or they'll stay the same. That's about all I can say for them.
Makes sense.
Yeah. So mortgage applications were down 4% this week, which volume and purchases both down 4%, refis down 5%. That might have something to do with the rates popping up for a few minutes. Year over year, we're still up 16% on purchases and over 80% on refis. The rate is about 7-8% lower than last year. And I can say that 0.5% fee that they put on, the FHFA put on loans is probably not going away anytime soon. They're telling us that they're trying to recoup $6 billion in COVID relief. However, they're not mentioning all the money they've made on all the volume. So I don't know how valid that is, but it looks like we're stuck with it. But rates are still amazing. So still a great time to buy, still a great time to refi. You know, who knows what's going to happen later on in the year. So if you want to take advantage of the low rates, I would say put your house on the market and buy something or refi.
Yeah. And they can reach you at
704-577-0144. I'm with Summit Funding.
704-577-0144, Sandy Dickinson, Summit Funding. All right, when we get back from the break, we've got lots to talk about. I'm going to talk to the buyers specifically when we come back, you buyers out there, and then we're going to tackle some of the mortgage myths. Sandy, you ready for that?
I'm ready.
All right, we'll be right back to Show Your Real Estate Today, News Talk 1110, 99.3 WBT. Hello, hello. Welcome back. It's Paul Jameson, your host, the Show Your Real Estate Today. It's Saturday. That day is here, and we are excited to share it with you. We're so excited to be talking about real estate. I am the owner of Jameson Realty, Jameson Property Management, Jameson Property Investments, here with my good friend Sandy Dickinson, our mortgage partner with Summit Funding. Hey, Sandy, welcome back.
Thank you.
All right, so first, before we go into the myths, I would like to have a conversation with you buyers out there. Now, sellers and folks wanting to sell, you know, we love to talk to you too right now, desperately. We love to sell houses. But I want to talk to the buyers. So sellers, if you listen in, you might learn something. So I'm going to talk to you sellers or buyers for a minute. So sellers, act like you're not listening. Like, you know, you're sitting on a bus, you know, and somebody's having a phone conversation and you're acting not like you're not listening, but the people next to you are talking real loud. So you really are, but you're not. So we'll do it that way. Does that sound fair? You've never done that, TJ, have you?
Absolutely not.
Yeah, you wouldn't ever. Yeah, I mean, you have a way of just turning it off, right?
Yeah.
Okay. And by the way, I don't know if you all ever have. TJ and Mark Garrison do a show on Thursdays and Tuesday. What is it called?
Dirty Restaurant Tuesday and Thursday.
Dirty Restaurant Tuesday and Thursday. That show, I'm going to tell you, is the funniest show on the air. It is my favorite show to listen to. I got to tell you, man, I have more fun listening to you guys do that than anything. I text them wildly. I had to pull the car over last week. I was laughing so loud.
And it's greatly appreciated.
It's fun. Yeah.
6:35 Tuesdays and Thursdays.
Yeah, you guys tune in. All right. So buyers, hello. Here's the thing. I'm going to give you the number one nugget, buyers, right now. Sandy, you're going to agree with me. And although you're shaking your head, people won't see that, but they might. If you brush your hair, they might hear you shaking your head. The number one thing I say to buyers right now when they call me and said, hey, we're ready to start looking for a home, I'm going, get ready and get ready early and call Sandy ASAP. Nothing starts until you talk to Sandy. Right?
That's right. That's right.
Yeah, she is shaking her head. I can see it from here. There, see?
Yep.
All right. You have got to have your financing in order. You have got to have the pieces in to have a pre-approval letter to be able to get the process going. And I say to people, look, how do you know what you can even afford if you don't talk to Sandy first? And I'm the guy that says just because you can afford a certain price doesn't mean you should buy it. That's not the point. The point is, in order to even make this process fruitful, you have got to have those pieces done. So start with Sandy, start with the mortgage. All right. Number two, start saving money, save some cash. You're not only going to need it to put that money down, and this is the misnomer, Sandy. This should be one of your myths, right? The misnomer is you don't just need money to put money down. You need money for due diligence fees, which do apply towards the purchase price if the transaction goes forward. You need money for inspections. You need money for expenses that are in a real estate transaction. Save your money. And number three, I'm ad-libbing number three because it's part of number two. Get your credit in order and don't, in the middle of this process, go buy a car. Am I saying that right, Sandy?
Yes, that is right.
Yeah. Unless you talk to your lender first.
Don't do anything. Don't even move.
Yeah, well, you can't move if they don't have a place to move to. But you have got to keep your ratios in order. If things are tight, but you've got it worked out, don't go out and sign up for 90 days same as cash because it's after your closing. That's a new credit line. Be cognizant. Number 4, be patient. You're going to fall in love many times with houses because you may not win the first one. Be prepared to fall in love more than once. It'll happen. Because the one you think is the one may not be the one. The one that is the one is out there. Wait for it. Okay? I always suggest buyers attend open houses and look at the different houses to see what they like and the areas that they want to be in. It doesn't commit you to anyone in that open house. If you go to an open house, the agent that's standing there, and I'll make a generalization, this is not true 100% of the time, but the majority of the time, the agent that is there working the open house is a rookie agent looking to get buyers because they're trying to build their business. That is how that world works. Most of the time, they're not the listing agents. Sometimes they are, but most of the time they're not. So you have no obligation to them at all. Give them your information. But if you're already working with a realtor, you don't have to feel bad about it. They're out seeking buyers to begin their career and to build their business. It's how this business works. So just know that, okay? My people, by the way, on my team, they're all seasoned. So if you see one of my open houses with one of my team, they're all experienced. So, all right. Get into a house early. Get into a house early. If you wait till Saturday and the house got listed on a Tuesday, you're going to miss it, more than likely. Get in early. And you know what that may mean? That may mean a showing at 8 o'clock at night. That's how it goes. Or if you can't get in early, tell your realtor, take your phone, take your FaceTime, take your Zoom, and do a tour of that house. It's how things are done in a vibrant market now. Think about all those people from San Francisco, San Diego, Chicago, Boston, Connecticut, New York. They can't just get on a plane. By the time they by the time they get through security, it's gone. Be flexible. Work with your agent. All right. Next, FHA and VA. If you're a veteran or if you're a first-time home buyer and you don't qualify, just know FHA and VA are great financing options for you. However, you need to be honest with yourself. It's going to take longer. Because in this market, when you've got 27 offers on a piece of property, FHA and VA are the tougher of the two options on a seller for various reasons, whether it be appraisal or repairs that are dictated by an appraiser. So just realize they're not nearly as in vogue as conventional financing or cash. I'm just saying. All right. So the last is make sure that you are flexible. If you see things or repairs that need to be made, call them out. But don't let caulking be what stops you from getting a home. All right? So save your money. Get in touch with Sandy. Let's go find something. It can be done. All right, Sandy, we've got about a minute, and then we'll pick you up with more after the break. So do I have to put 20% down to get a mortgage?
No, you do not.
Okay.
In fact, you're talking to first-time buyers. We have some great buyer programs with just 3% down that are conventional.
What?
I mean, all that seller wants to see is conventional.
Yeah,
and even if it's 3% versus FHA at 3.5%, the key is to have great credit. So Just everybody be careful about your credit. We have some 100% programs, USDA in unpopulated areas, and VA if you're a veteran. But for the most part, I would expect for everyone to anticipate at least 3 to 5% down.
Yeah, 3 to 5% down. Okay. We're going to pick up with the next myth about renting versus buying when we come back with Sandy Dickinson with Summit Funding. I'm Paul Jameson, your host. You're tuned into the show, Your Real Estate Today. Saturdays, our day with you. So stay with us. We'll be right back. News Talk 1110, 99.3 WBT. Hello, friends. Welcome back to the show, Your Real Estate Today. It's Paul Jameson, your host. Wherever you are, riding down the road, hanging out, sitting out back, sipping something. We hope that you're enjoying the show today. And if you're just tuning in, this is the show, Your Real Estate Today. And I'm excited to be sharing that time with you. My guest today is Sandy Dickinson with Summit Funding. We're talking through the myths of a mortgage or acquiring a mortgage, having a mortgage, getting a mortgage. And of course, as you all know, I'm with Jameson Realty and Jameson Property Management, Jameson Property Investments. All right, Sandy. So we just got done saying you don't need 20% down. You've got a 3% new first-time homebuyer program for conventional and a 5%. And many other products to choose from. You got ARMs and stuff too, don't you?
Yep, we got it all.
All right, so tailored to your needs, but 20% is not set in stone. All right, what about renting is always cheaper than buying a home? Is that a myth?
So that is a myth. Right now, I think rents are at a premium and rates are super low, so often depending on the price of the house compared to what you're renting, often we see a lower mortgage payment versus the rent payment. So
yes, and and I'll tell you that from my end, rents are at a premium. That's why we are working with a lot of investors right now. Rent is at a premium because inventory is low, and we're getting a plethora of people that are coming here from other places. They're escaping and coming here. Gosh, it's nice to be here, you know? All right. So renting is not always cheaper than buying. All right. Myth number 8, the lowest interest rate is always the best option.
That is definitely not true. So,
oh, pray tell why.
Very tricky. So a few reasons. Number one, a lot of times the lower rates come with points and people just tend to see the rate and they don't look at the cost. So a lot of times the lower rates cost. A lot of times, like I've had one recently that went with a discount lender and the rate was amazing, but they couldn't close the loan. So it doesn't do you any good to have a super low rate if the loan can't get closed.
But it looked good.
It does look good, and then they're just disappointed because the rate they get is not what they were promised, and so it's just a gut-wrenching experience for all.
Yeah, it's kind of like walking up to a car in a parking lot and saying, "Boy, I really like this car," and it's not yours.
Right.
A rate quoted that you can't close on.
Doesn't mean anything.
Doesn't mean squiddly squat, does it?
Yeah, very sad.
I made that up, by the way. Y'all can use that, squiddly squat. That's fine. Okay. All right. Next, you should never do an ARM loan. You can't have my ARM.
Sometimes ARM loans are really good. I used to do them all the time. It depends on the market and it depends on your scenario. If you're an upwardly mobile worker, young, and you just, and you relocate a lot, so you're not going to keep the loan a long time. And if that ARM rate is a good amount lower than the fixed rate, then yeah, go with that. I'm not seeing that right now, but the market can change in an instant and we might see some really nice ARM loans. Right. I mean, with fixed rates in the 2s, how are you going to get much lower on an ARM? So I'm not seeing much in the way of ARMs, but seasons change and sometimes ARMs are the way to go. So I would say never. Whatever fits your financial need at the time is what you should go with.
Yeah. talking about, loaning your arm. I don't know why this came into my head. It was a moment. There must have been some therapy involved with that moment. My mom would always say to me, "I'm so mad at you right now. I'll tear my arm off and beat you with it."
Oh,
Did your mom
well,
say
luckily
that?
she won't tear your arm off.
See, I'm not the only one. My mom could dislocate her arm and reach in the back seat and just, I don't know how she did it,
Whoa.
because cars were really big back then. You could live in the back seat. We used to climb up back where the back window was. We could lay down back there. That car was so big. Days are gone. No seat belts. It was awesome.
I know, it was good times.
Yep. And then you'd sit in that chair where you're facing backwards,
Right? We had that
make
too.
fun of
The
the people
station
behind
wagon.
Yeah, in the wagon. All right. Okay. Investment property has to be rented before you can get a loan.
Nope, that's not true. That's been bounced back and forth a few times over the last few years, but at the moment, we do something called a rent comparable schedule with the appraisal, and whatever the typical rent for the area is what we use to offset the payment. We use 75% of that number to offset the payment, and it really does help people qualify.
Okay, so that I'm clear. So let's say, for example, I am ready to buy a piece of investment property and the rent is $1,000 a month. It's not rented, it's vacant.
Mm-hmm.
And then you're going to use as an offset $750 or 75% of the $1,000 to my credit in evaluating that towards the loan.
Right. We don't use it as income, but we offset the debt with it. That's correct.
Yeah, right. Again, yeah, in comparison to the debt. Okay, all right, good. That's pretty cool.
Yeah, we like that one.
I like that. That's a good one. Positive. Okay, next. If your credit score is low, you can't get a mortgage. You can work on it, you can fix it, but if it's low, you're stuck.
Depends on how low it is. We want to see that people are motivated to make their payments. So yes, we do low credit scores, but we really look if they're low at that last year, the most recent 12 months, we check mainly your housing expense, if you've been renting or if you've had a mortgage, to make sure that's been paid timely. And we look for not chronic lates. Like if you have several lates year over year over year, that's a problem. We don't believe that person would be motivated to make a mortgage payment. But if there was one devastating time in your life, you lost a job or somebody got sick, something that's not in your control, and then we see that you've recovered, then yes, we can even do a low score. Or say you just have a lot of high balances on your revolving debt because you have a low interest rate on that one card or whatever. We do evaluate all that. So low scores can work, but you're going to be paying a premium in your rate if you have a low score, because everything is score driven right now. But you can get one. It's always good to explore what your options are. And sometimes I can help you get your credit score up even 100 points over just a short amount of time. It just depends on your own scenario.
Right. The majority of the time, Sandy, is what you see, those little medical payments driving somebody's score down.
Yeah, I don't know.
Or
There's
medical
been
bills,
there's a kind of a rumor out there that people don't have to pay their medical debt, or they just pop on there and you don't know it. We see that a lot. So I would say pay every debt that you know about or make arrangements to pay it. But if you happen to see one that pops on, typically medical companies will, or collection companies will remove them if they can get your payment. So it's a negotiation. I wouldn't just pay it to zero. I would make sure that they remove it off your credit report and then get a letter confirming that.
Okay, that's a good one. If you've had a short sale or been through a foreclosure, you can't get a loan. Is that true or false?
Well, it depends on how long it's been. So FHA is a little more lenient than conventional. Foreclosure, they like 7 years on conventional. FHA, I think it's 3 or 4 years. So short sales are about the same. I think they're 4 years on conventional. FHA is 2 to 3 years. So every case is a little bit different, but it's going to take some time. They're like foreclosures. That's your housing debt. That's what we're loaning you money for. We take it super seriously. So it's best just to check. It was a problem back in 2010 because people thought they were foreclosed on, but the banks never filed the paperwork for years and years, and we go off the paperwork date. So anyway, I would say at all costs, if you cannot short sell or foreclose, that's probably your best option.
Right. And in this market, you have a chance for sure.
Mm-hmm.
Right. All right. Well, we've got more myths to come with Sandy when we come back. She's going to share more of those with you. And I'm going to also talk about 7 pitfalls when making an offer. 7 pitfalls when making an offer. This Show Your Real Estate Today. News Talk 1110 99.3 WBT. We'll be right back. Welcome back. The Show Your Real Estate Today on your Saturday afternoon. I'm Paul Jameson, your host with the Jameson Companies, here with Sandy Dickinson with Summit Funding. Hey, Sandy.
Hey.
We've been going through some myths about Sandy's business and the mortgage business and getting a loan. Before we jump back into that, what are out there 7 pitfalls when making an offer? 7 pitfalls when making an offer. And we're not going to do lightning round, but we're going to go fast because we want to get back to those myths. All right. Number 1, in Sandy's world, no pre-approval. Submitting an offer without having the paperwork to show you can actually borrow the money or have the money. Right?
That's right.
That's a biggie. Well, I remember before I said, start with Sandy. Start with getting your mortgage set. If you want to borrow money, you got to be able to prove you can borrow money to yourself and to everybody else, right? Number 2.
So I do have a lot of people that come in and say, I'm ready to put an offer on. Can I have a pre-approval? And sometimes it's not as fast as they would like, and they lose out.
Especially if you're self-employed.
Exactly.
I'm doing a hand raise here. I know what that's like already. Yay!
Yes, you do.
Y-A-Y. All right. Number 2, pitfalls when making an offer. Bidding your entire budget. Remember when I talked before about saving money and cash, and that sometimes people forget that not just the down payment is the only cost in getting a loan. What if you put down due diligence money on a house and for some reason there's a huge obstacle that comes up, whether it's a lending obstacle with the appraisal or a repair contingency that you just can't deal with? You're going to walk away from that due diligence money, that layaway money, and that's going to go to the seller. You're not going to get that back. And in some cases, that can be several $1,000s. Make sure you understand that and you plan for that. So if you put in the whole enchilada, it's like going all in at the casino. Be careful. That's a heavy risk. All right. Number 3, not researching the market and the seller. All right. If you're out there ready to make an offer, your agent should be asking the question, what other than money is important to the seller? Do the research so you know what triggers are out there. And also just do your research. Make sure you're paying the right price, or you know what market value should be within a certain range, and that home actually meets your needs. Like if you have a Joe's Plumbing Company and your truck says Joe's Plumbing Company, there are many neighborhoods in Charlotte that won't allow you to park that truck in your driveway. And you make the offer and you go down the road, you're stuck because they won't let you park it there, and they'll fine you. At some of those HOAs will fine you $50 a day for parking your truck in your driveway that say Joe's Plumbing on it, or a ladder truck, or Know the rules of the HOA you're buying into. All right. Number 4, pitfalls for making an offer. A lowball offer, thinking they're going to renegotiate. No, they don't have to. And very rarely will you be the only one right now. I don't care what price point you're in. I've seen multiple offers in $1 million plus. Don't test the water unless you're willing to jump in. That was deep. All right, next, putting too many contingencies in your offer. I can say right now with confidence, if you haven't even listed your house yet, or it's not under contract, and you put forth a contingent offer, more than likely you're not even going to get considered in almost every scenario. Does that make things tighter for you? Yes. But don't put many contingencies in it. And the other thing is putting contingencies in it like, I want the mirror in the dining room to the left that could be somebody's heirloom. You start throwing personal property and stuff you're going to lose. You don't know what emotional attachments people have. Deal with that stuff later after you're down the road. Offer to buy it. All right. Number 6, using the seller's agent. Dual agency is also a very interesting position. In North Carolina, if you have an agent who's working with a buyer and a seller, they're Switzerland. They can offer you no advocacy. All they can do is go, this is what they said, or this is what they said, or this is what they said. You're Switzerland. You need an advocate in a market like this. So be careful with that. And last, a pitfall that can happen with making an offer is getting and following your emotion. You know, you can get wrapped up in the moment and it can cost you money. You need a voice of reason. That's why you work with a realtor. They bring their experience to the table. And, you know, I've spoke many times about when you work with experienced agents, they don't need your sale to eat. You need a clear head and good advice, and make sure you get that, irregardless. Okay? All right, there's the 7. All right, Sandy, now we're bouncing back to the myths. Folks out there, just follow with us. Follow with us. We're making sense. So I liked that little snippet of those 7 things. I see it all the time.
Yeah, I like it too.
Yeah. All right. Let's see. Once you're number 13, once you're approved, you can go ahead and take another loan for your new furniture.
That would be a negative. Don't let people inquire on your credit. Don't get new debt. It will delay your closing, even if you do qualify with it. Don't even set up your cable vision because they check your credit. And we always check. It's a little better now. Up to 15 days prior to closing, we do a refresh credit report and check your balances on all of your credit cards and check to see if there's new inquiries and check to see if there's new debt. We always do that. So save yourself a lot of angst. Don't do it.
Yep, I always give the speech with buyers. All right, number 14, the loan officer has the ear of the appraiser.
That would be false. They actually do everything they can to avoid us. We're not allowed to call them. We are not allowed to give them any indication of value. If they have made a mistake, we can call them and say, hey, can you explain where this information came from? But we definitely cannot call and try to sway their decision about the value. That's against the law now.
Okay. All right, Sandy, close your ears for a minute. So
Okay.
Here's what we do. When we have a listing, we actually make it so the appraiser has to call us for the appointment. It gives us, the representing the seller, the opportunity to meet the appraiser that the buyer hires. When they come to the house, we provide them with information that would be helpful for their appraisal that they wouldn't normally know by just walking through the home or driving by the home. This is a key component of how to make sure the appraiser gets good information, and they like that, most of them, and that you have the opportunity to make sure that you're getting the most out of that appraisal that you can. So realize we, representing the seller, can talk to the appraiser, and most of the time they're welcome and they listen to us. All right, so Sandy, again, you talked early on, it's a great time to buy, it's a great time to refi, and it's a great time to talk to you at Summit Funding. How do they get you?
They call me at 704-577-0144.
704-577-0144, Sandy Dickinson, Summit Funding. And of course, you can always get us and me at 846-DONE, 846-3663, or on the web at myjamesonhomes.com. We'd love to talk to you. Investing, buying, selling, property management. We are here to fully service you, and we're thankful for you. God bless. We'll talk to you next week. The show, Your Real Estate Today, here on News Talk 1110, 99.3 WBT. See you then.